What is going on, traders? We're going to try to make this quick, but before we start, like, subscribe, comment your thoughts below. Let's get into the video. So, today was pretty lackluster. We didn't really get much upside or even downside. I would argue that we got more downside than upside, but nothing too significant to really worry about or really get excited about, all right? And so, in my last video, I was pretty bullish heading into today, but it seems like Monday and Tuesday pretty much flipped, where we see Monday is usually the boring day and Tuesday is the day where we get a little bit more value. But we didn't really get that today. And right now, if we get a closer look at the NQ daily time frame, we're right now at this daily supply and demand zone. And as you guys can see, there's a lot of turbulence here. And right above this daily supply and demand zone, there is a fair value gap. Now, what I will say is that I'm still leaning bullish, and I still think we're at some point we're going to head towards this 20,300, 20,500 range. But one thing I did mention in my last video is that at some point in time, we will need to retest right down here where this daily supply and demand zone, and not only daily supply and demand zone, but a fair value gap is. And at some point, I do believe we're going to retest this 19,250, 19,300 range. It is possible that we go even lower than that, but I'm not really counting on it. But given the news that we do have this week, I would just urge you to not be surprised if we just so happen to go lower. And if we do break out of this range, then that causes room for concern, or break out of this channel, then that would cause room for concern. Now, if you're new to this channel and you have no idea what I'm talking about, right now, we've been trading within this channel for about a year now on a daily time frame, and we broke back into this channel. And one thing I always tell my viewers and even Discord members is when we roll back into a channel, chances are we're going to continue in a direction. And so, as you guys can see, there's a good example up here. We broke out, Bulls got trapped, and then we broke down and roll back into the channel. Therefore, we continued in that direction. And now we're doing the opposite. All right. And it looks like we can continue in this direction. So I still think we're going to see more upside, but I do think, or it does look like, from what we're seeing on the futures, which we're going to go over even further, is that we are looking at a potential retest coming at around 19,250, 19,300 range. Now, as far as tomorrow, we do have news. Okay, we have FOMC meeting minutes, and then we do have target earnings, so that could influence the direction of the market as well, depending on how the earnings comes in, whether it's good or bad. But more so, I'm leaning towards FOMC meeting minutes. Sorry, clicked on the wrong link. Right now, I'm leaning more towards meeting minutes, FOMC meeting minutes at around 2 p.m. Eastern. So something to pay attention to. My overall point right now is that things are not looking okay for the short term. I do imagine that one of these news events that is coming in this week is going to come in somewhat bad. And then maybe Jerome Powell pretty much clears the air Friday, and then we continue higher from there. Right. So that's what I'm looking at as far as NQ. We look at the ES and we're essentially looking at the same thing. Once again, we're looking at the daily time frame and we're at this liquidity zone on the ES as well. We failed to get above 5,630, which I told you guys in the last video was one of the key levels that we need to get above. And then after that, you're looking at a move all the way to 5,650 psych level and then 5,670. So right now, we're currently rejecting this 5,630 level and failing to get above it. And the same thing that we talked about on the NQ, at some point, we may want to mitigate this fair value gap all the way at 5,500. All right. So I will be really careful. I've been urging this for quite some time now, and like the past couple of videos, that we really need to be cautious because right now we're really in a between a rock and a hard place in this area here. So something to really pay attention to as far as the ES as well. Let's go over the triple Qs. Now, triple Qs, I mean, essentially we're looking at the same thing as well, right? And you're seeing this across the board. Pretty much the same thing. You got your fair value gap all the way at around 490, 492 range. Not only that, but you do have a gap that's open at around 494 on the triple Qs, which is about close to previous highs at around 503. And right now, we're at this daily supply and demand zone. So either the market is going to continue to push higher from here, or we see some type of cool off. We retest, just like I showed you guys on the NQ. We head back towards 464, 460, and possibly bounce off there. And we might even form an inverse head and shoulders pattern. We'll have a shoulder here, head here, and maybe a shoulder here as well. The neckline wouldn't be as clear right now, but I'm guessing this will be the neckline at around this daily supply and demand zone at around 482. So we could be looking at a move like that sometime this week. All right. We do have a lot of news catalysts. If they all come in good, then I imagine we're going to see all-time highs. But I do imagine at least one of them is going to come in a little sketchy, and then maybe Jerome Powell or whatever other news can clear that news up. So we'll see what happens. But that's what I'm looking at as far as the triple Qs. As far as upside go, because I mean I'm talking about downside right now or potential downside. If we just continue to the upside, then I will be looking at 490, 492, then previous highs and this gap fill at around 494. You guys know my target as far as all-time highs is about 510. I do think that's going to happen this year. Do I think it's going to happen in the month of August? Can't really say for sure. I would genuinely be surprised if it does. But if it does, then that's something to be worried about, in my opinion, because the month of September and October are notoriously bearish. So if we do hit all-time highs this month, maybe it's because of Jackson Hole event, or maybe it's because of Nvidia earnings. I do imagine September is going to be a very, very bearish month. We look at the SPY. Same thing on the SPY, right? So hopefully you guys are pretty much putting everything together here. We're at liquidity zones across the board. All right, we're at these really strong liquidity zones across the board, and we're going to need news in order to break higher. You saw it on the NQ, you saw it on the ES, you see it on the SPY, you see it on the triple Qs. We're at these liquidity zones, and as you guys can see, I mean, we zoom out, and we've never retested the bottom daily supply and demand zone at around 544 on the SPY. So that's another thing to think about. We have a fair value gap here, and we have fair value gaps that haven't been mitigated even lower than that. But right now, we're going to focus on 544. So at some point, I do imagine the SPY is going to potentially want to go back down here, just like everything else I showed you. And there's even a gap here as well. So there's not only a fair value gap, but there's a gap here as well. So at some point, I imagine we're going to want to retest this, potentially form an inverse head and shoulders pattern. You got your shoulder here, head here, another shoulder here. And if this does play out, we definitely could be looking at all-time highs. And you guys know one of my targets is 580 and then 600. I imagine if we start forming an inverse head and shoulders pattern here, then bears will get trapped in this area, especially if it plays out. All right, so something to pay attention to in regards to the SPY. But right now, at some point in time this week, I do imagine at some point we will want to retest 544. Okay, that's what I'm looking at in regards to the overall market. It may not be exactly 544. Maybe we just stay within this channel and maybe just simply retest about 555, 550. Can't really say for sure. I can't imagine how bad the news will have to be for us to really drop this low. But the market tends to overreact to a lot of things, especially now that bears are back into the market. So I wouldn't be surprised here. Now, one of the main things that's really having me concerned, I guess I wouldn't say concerned, but if you're bullish, one of the main things that you should be concerned about is the Russell. And we look at the Russell and we go to our weekly time frame. All right. So right now, the Russell, and just like everything else, the SPY, the triple Qs, the NQ, the ES, the Russell is at a very key area. So everything's pretty much at a key area where it can possibly reject or is currently rejecting, if not that. And right now we're at this resistance, right? We rejected here. Well, Bulls got trapped, rejected, rejection, rejection, rejection. Bulls got trapped once again, rejection. I guess it's a weekly time frame, so I guess being trapped is more subjective here. But regardless, and right now we're at this resistance once again, and we're currently rejecting as we speak. Now, the week isn't over. By all means, we can even break higher from here, but I don't think so. I don't think that's going to happen. One thing we've been noticing with the Russell, and one thing I want you guys to understand about the Russell is very, very sensitive to news, especially when you're talking about interest rates, rate cuts, anything revolving around money or credit or anything like that. The Russell is very sensitive to. And despite the market really pumping, and I mean like really pumping, you're talking about almost previous highs, all-time highs, the Russell is nowhere near. Okay, it's just nowhere close to its previous highs, which is around about 230, 230 range, right? And right now, it pretty much is giving up. Let's go to the daily time frame real quick. And right now, you guys see that we pretty much have a bearish engulfing candle rejecting this weekly resistance. And not only that, we have this gap that's been filled. And what do I tell you guys about gaps? Gaps have very strong resistance and support. And right now, we're rejecting the resistance of this gap at around 215.7, more or less. Not only that, but the fair value gap is pretty much mitigated. And I do think the Russell is going to continue to reject from here. So my overall point is that The Russell is showing signs that it wants to drop, and it needs the market to drop with it. In order for the Russell to really drop, and this really goes for a lot of the futures, right? In order for the futures to drop, it pretty much needs a lot of things to fall in line with it. And right now, the Russell is showing that it is waiting on the market or it's waiting on bad news. It's showing all the signs. In the Discord, we do have an AI bot. I've told you guys about this AI bot before, and the AI bot has been really signaling a lot of IWM puts, which is the Russell, right? Um, we took the 205 puts for September 20th, and if you and I tell my members to pay attention to when these puts are being put in, because these puts across the board are being put in for the month of September. Now, keep in mind, you don't have to wait to the month of September. These plays usually play out way before the actual expiration date, more or less. But regardless, I mean, you have 203 puts for September 20th. I just showed you guys 205 puts for September 20th as well. And then you have, VIX 17 calls. The premium is very low on this, so I really wouldn't pay attention to it. But regardless, I mean, and then you have another IWM 205 put for September 20th as well. So there's a lot of IWM puts being put in for the month of September. And since these puts have been being put in, IWM has been dropping. It's been slowly dropping. And it's only showing me that it's waiting on the market to back up its decision. When the market was dropping or did started to dip today, the Russell started to move faster. But when the market slowed down, the Russell has been pretty much consolidating within this range between 213 and 212. Okay. So hopefully everything is making sense. Across the board, guys, we're just at very key levels. We're at key zones across the board. The NQ, ES, SPY, triple Qs, IWM were at very, very important areas. Even the Dow Jones. I mean, we could look at the Dow Jones too. Same thing with the Dow Jones. And I'm not sure I marked it on the Dow Jones, but even the Dow Jones, it's it looks exactly like what we see on the SPY and the triple Qs. Like I told you guys, right here, right? We're clearly at this resistance right here, or this trend right here, right? Not only that, but there is a daily supply and demand zone here. Let's actually mark it out for you guys, right? And I actually forgot to mark it out, so I do apologize about that. But we're at this daily supply and demand zone here. And so we are hitting this trend. We're somewhat rejecting it. We created a doji, so I wouldn't say we rejected it. But remember what I said about NQ, triple Q, SPY, all that, how they could potentially form an inverse head and shoulders pattern? Look here. If we drop from here towards 330, I mean, yeah, 398, give or take, look what we can potentially be forming. So across the board, we have potential for inverse head and shoulders patterns. If these patterns play out, we're definitely looking at potentially all-time highs. Okay, that was kind of backwards. I said definitely and then potentially. But we could be potentially looking at all-time highs here. Okay, so I want you guys to keep that in mind. There's a gap here, there's a fair value gap down here that needs to be mitigated at some point in time. Everything is literally showing the same thing across the board. The Russell is at a key level, the NQ, triple Qs, SPY, ES, they're all at very key levels. And now we're talking about the Dow Jones as well. And you guys know I don't even look at the Dow Jones like that. I just think it's so boring. Okay, but I just had to point that out just in case you guys don't believe me or not convinced. So my overall point here is that something bad is coming. I don't think it's going to be the drop of all drops that I've been talking about. I don't think we're there yet, and I don't think it's going to be the end of the bull rally that we currently have. I still think we still have more room to the upside in regards to this rally, but I do think we're going to see a massive dip or a decent sized dip before we potentially head higher. I don't know what's going to cause that. It could be the FOMC minutes, it could be unemployment claims Thursday, or it can be the Jackson Hole event. All right. So that's really what I want to get through to you guys. I mean, and we can talk about Bitcoin real quick, and then I'll let you guys get up out of here. Bitcoin threw us for a loop, but Bitcoin still looks fine as long as it's above 58K. I still think Bitcoin wants to see that 63, 65K range. Right now, this inverse head and shoulders pattern is pretty much invalidated, but I still think as long as if Bitcoin stays above 58K, you're pretty much fine here. That's really all I have in regards to Bitcoin. It's not really much to talk about here. So hopefully you guys get the idea here. The overall point here, like I've been saying in all my other videos, is to be very cautious. Pay attention to the IWM because that is the thing that has really like got my attention. This is the one that has my attention and has me thinking that something we're going to get bad news at some point in time this week, I believe. Okay, so I mean, when we're talking about the IWM, it's very sensitive to news. It hasn't really been pumping with the market. Sure, it's been going up, but it's not showing any attempts that it wants to reach its previous highs. You would think it would move a lot faster, given with how much we move, but it's just not doing that. And it's while the market was going up, it was starting to drop. Okay, and then when the market was starting to drop, it started to tank even faster. And then when the market slowed down, it started to consolidate. The Russell wants to drop. It just needs the market to back it up. And I think what's going to cause the market to back it up is bad news. So that's all I have for this video. Hopefully you guys got something out of it. Hopefully it makes sense. And that's all I have. Until the next video, traders, have a good one.